Good morning and welcome to Marco on Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good morning, it's the 25th of August 2026. 9:54 a.m. The market is due to open shortly. We'll just have a look at the indicator. So the ASX SPI 200 futures is showing an increase of 0.15%. So a fairly flat day is expected. S&P overnight was down 0.28%. The Dow Jones was up 0.26%. And the Nasdaq down 0.76%. Today we've got Coles earnings coming out. They've published their investor presentation this morning. So if you go into your broker site and go to the news and announcements tab under the ASX announcements, you'll find all the reports that were published this morning. I've quickly downloaded that this morning and had a quick look. Coles is one of my shareholdings, just for transparency purposes. You'll see that on my portfolio, I purchased that on the 7th of the 8th, 2026, so 18 days ago. I paid $23.98. Target sell price is $24.52. The current price is $22.64, so it's down quite a bit. We're down 5.6%, and the target sell price $24.52, which is another $1.88 or 8% increase we need to achieve to get that 2% margin that I work off. I'm not expecting, unless there's some really great things in there that the market likes, I'm not expecting that to go up today. In fact, let's have a look at the market indicator for Coles. At the moment, it's showing as 22.65, so it's just showing as flat at the minute. So anyway, let's have a look at the report and then let's watch the market open. Coles. So Coles is obviously it's one of the largest supermarkets chains here in Australia. Along with the main competitors are Woolworths and Aldi. So Woolworths and Coles have about roughly 30% of the market share each. Aldi have about 10%, and then you've got all the independents like IGA and yeah, all the other independents, Friendly Grocer, etc., etc. So Coles is one of the largest retail businesses operating supermarkets, liquor, and online retail business. Its brands include Coles Supermarkets, Liquorland, First Choice Liquor, and Vintage Cellars, serving millions of customers each week through their national store-wide network and growing an e-commerce platform. The company also leverages its Flybuy loyalty program, its retail media business called Coles 360, which they have a podcast, and music, which is interesting, a supply chain infrastructure to drive customer engagement and operational efficiencies. So let's go to their highlights page here. So we've got the group earnings before interest and tax, excluding significant items, has increased from 9.9%. So increased by 9.9% to $2.23 billion. And while its net profit after tax rose by 13.7% to $1.2 billion, demonstrating a strong cost control and productivity improvements. So basically, after all said and done, they walk away with $1.2 billion, which is quite a decent amount of profit. I like companies that make a lot of profit. Let's have a look how much they keep. I know I always bang on about this, but 1.255 divided by the turnover, which was $45.6 billion. So that's a 2.7% net profit margin after tax that they keep. So for every customer that walks in the door, they spend $100 and what's left over is $2.70. So that's after paying for the products, paying for the staff, the rent, the interest, the taxes, everything. And that's what's left over to reinvest into the business or give to the investors as a dividend. So good on them. I like Coles as a business. I'm not going to hide that. Their online business is continuing to grow. So their e-commerce sales have increased 26.4%, reaching 13.6% of the supermarket sales, while the customer fulfillment centres become EBITDA positive in only their second year of operations. So let's break that down. We've got of the total sales, so of this $45 billion of total sales, we've got 13% of that is done online. So that's quite a big number. Let's have a look at that. So 14.5 times 13.6, so about $6 billion, or if we break it down weekly, times a million. So about $119 million in online sales each week. I'll just fact check that. Oh, sorry, I didn't get the 52. Yeah. So $119 million in online sales every week. And that's roughly $17 million every day. So if an average order was, let's say the average order was $200. I'm just making this up. I'm not sure what it is. 17 million divided by 200. So doing about 85,000 orders every day online, roughly. That's a huge, huge number. But Australia's a big country. We have a population of what, 27 million, 28 million people. I think the last research I saw was that people are shopping like 2.7 times per week. So yeah, good on Coles for that. Okay, let's go to page 4. Okay, so their Coles reported a 5.1% supermarket sales growth excluding tobacco, and noted that it gained market share while customers' satisfaction improved across all major measures, including price, range, and availability. So they're saying that so the surveys that they have done and the team engagement they have done are saying that that's positive. So that's good. I know here in Australia we had the ACCC did take Coles to court recently for some of their advertising on their promotional items, saying that it was misleading, and I think they were found to be guilty of doing that. So hopefully they've improved their processes there and their advertising rules, I suppose. All right. So they are under a bit of pressure in the liquor department. So page 22. So they talk about liquor sales fell by 3.3% and EBIT declined by 47.8%. Management cited weaker consumer spending, elevated promotional activity, and cycling prior year benefits from competitor supply chain disruptions. So what they're talking about there is Woolworths had, well, it's actually not Woolworths, but Endeavour Group had issues with their distribution center. I think they had people go out on strike. Or was it Woolworths? Actually, it was Woolworths, but Woolworths do um, the distribution for Endeavour Group. So that's how they are linked. And obviously, Coles benefited from them not having product on the shelf. So that was interesting. Page 19. Okay, we've got Coles plans approximately $1.55 billion of FY27 capital expenditure, including an $880 million Victorian automated distribution centre and around $300 million of additional investment in stores, technology, and AI initiatives. While supportive of a long-term growth, this will require a substantial capital deployment. So they're embracing the technology to have automated warehouse and distribution centers. So if you think of Amazon and all those little, robots going around picking stock, well, similar here. I think the Woolworths do have one in operation here in the east of Melbourne. The name escapes me. So okay, page 12. I just wanted to go over here. We've got the company delivered $311 million of simplify and save to invest benefits during FY26 and has now delivered $876 million since FY24, suggesting productivity initiatives are becoming a major driver of earnings growth. So they're embracing the technology. A couple of things I'd just like to point out. So obviously they've netted $1.2 billion in profit, which is a fantastic amount of money for a company this size. They do currently, because there's a lot of haters of companies that make so much profit, just keep in mind that they do employ 115 direct employees. And, the flow-on effect of employees, contractors, farmers, producers, suppliers would be huge. And they also contributed $529 million to the government taxes, which obviously goes back to provide roads, hospitals, education, etc., etc. So let's cross over to the market and let's do a refresh and see what happened with the price. Okay, so it's fairly flat, down 0.3%, nothing significant there yet. It does take a while for investors to read the announcement and the reports. So they were published about an hour ago. So we'll see how that performs later in the day, if there's any change. Interesting that Woolworths also were reporting today, so I couldn't cover both of those this morning, but let's just have a quick look at Woolworths and see what their reaction's been. So they're also flat. So we'll see how they go by later in the day. So we were expecting to be fairly flat today, 0.15% up was the expectation. Let's have a look at the market overall. And we've got an increase of 0.2%. So that's, right on par there. Let's have a look at the ASX 200 stocks. And let's have a look at the leaders and the losers there. So we've got Regis Healthcare, excuse me. They are down 9.9%. Mona Delphus Group, who do construction and engineering, they're down 6.5%. We've got Liontown, who is a specialty miner. They are down 4.9%. IGO Limited is a specialty miner. Also, they are down 3.82%. Alcoa, which is down 3.67%. I'm pretty sure they are they do aluminium products. I don't know if they're a miner as such, but other activities include mining, refining, and manufacturing processes. There you go. And then on the leader side, okay, we've got ARB, which is auto, truck, and motorcycle parts, 14.03% up. I assume they've had some not dividends, an announcement today, or their figures are out. Okay, they've got some releases today. So that is a theme that I'm seeing. I did mention that on a few videos ago about these companies that are doing, parts and vehicle parts and components. So that's an awesome result for ARB. We've got Electro-Optic Systems is up 6.8%. They do aerospace and defense. Ansell up 3.7%. They had earnings release yesterday. They did, sorry, it's kicked me out. That's weird because I was using it. I'll just log back in off screen. Yeah, with Ansell, they, now that's thrown me, sorry. Okay, let's get that back up. ASX 200. And then on. Yeah, so they were up 18% on open yesterday with their results. And then they did end up around that 10% higher. And so far today, they're up 4.3%. So the market's digested their report and they're very happy, it looks like. Then we've got Horizon Holdings. They do ground freight and logistics. They're up 3.7%. And the last one is Whitehaven Coal, up 2.66%. Have a look at my broader list. Anything new there? Endeavour Group down again today, 3.1%. They had a drop yesterday. There's nothing really I want to highlight out of that lot. We've got ARBs on my list already. Before Pay, that's up 5.4%. Aussie Broadband up 3.1%. And that's about all I wanted to cover there. We'll have a look at the portfolio and see if we've made any ground or any losses today so far. So I'll go into the portfolio holdings. Okay, so we've got Commonwealth Bank up 1.1%, Accent Group down 0.7%, Westpac up 0.15%, and Coles down 1% now. So, they're not being rewarded for their great results, but share prices are, they are an expectation, the price is around the future expectation. So, yeah, it's not based on what they just delivered. And yeah, it's all about expectations. So if the results were better than expected, then we'd probably see an increase. If they're as expected, they'd probably stay the same. If they're a bit worse, then we'd probably see a drop. So anyway, we'll see how that pans out. It usually does bounce around a bit throughout the day. So I'll leave it there for now. So Coles Commonwealth Bank's coming back, so that's good. We might start to see some positivity on the bank side because they've been hammered lately, down 10% in less than 3 weeks, so not great. On that note, we'll call it a day. Thanks for watching and supporting the channel, and I'll see you on the next one.